Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me is Brennan O'Connell, Data Solutions Manager, Optimal Blue, the largest digital mortgage marketplace in the U.S., which has many similarities to other marketplaces and exchanges like Nasdaq. Brennan, welcome to Trade Talks.
Hey, Jill. Thanks for having us today.
All right, you got it. Tell us a little bit more about Optimal Blue and your footprint within the financial services industry.
Yeah, definitely. So Optimal Blue, as you mentioned, is the largest mortgage marketplace in the country, facilitating roughly 1/3 of all mortgage volume through the system in the United States. So where we sit is sort of a unique position between the loan originators on one side, which in the mortgage industry is known as the primary market, and the loan investors or aggregators on the other, which is known as the secondary market. And we help those two groups interact and take loans from origination in the primary market through to the secondary market, where they're ultimately packaged and sold as mortgage-backed securities.
Tell us more about the recent partnership with Nasdaq and your family of mortgage indexes.
Yeah, definitely. So we, given the volume that we've gotten through the system, we decided last year to start generating our own mortgage rate indices known as the Optimal Blue Mortgage Market Indices. And those are 16 rates that are based on the national average of the most popular products that borrowers can get for a loan. So think the FHA product could be an offering that about 1/3 of the loans that are processed in the country go into creating an average rate for the FHA, and we produce that mortgage rate each day for the loans that go through our system. So what Nasdaq gives us with the Global Index Data Service is an opportunity to disseminate these rate indices out to a much wider audience. So we've got sell-side firms, buy-side firms, and financial web portals, all that give the opportunity for consumers or investment firms or lenders much greater access to this set of indices that we've created.
Brennan, what sets this family of indexes apart from other indexes available on the market?
Yeah, it's really three things that sort of make the OBMMI unique. The first is the type of data that is used to generate the indices. So we call it transacted versus surveyed rates. So many of the alternatives in the industry, if you're looking at what are advertised mortgage rates, they're based on surveys of lenders, and they are sort of by design just based on what a lender is able to best offer, and that's what is created for a surveyed rate. On the other hand, a transacted rate, which is what Optimal Blue generates, is based on loans that are actually locked between borrowers and lenders. So we're able to see what is actually happening versus just what is a survey response look like. The data is also generated daily. So in times of market turmoil, which obviously we're all seeing much of this year, it's really important to see what are the updates on a daily basis. It's changing, and Optimal Blue produces its rates on a daily basis. And then the final piece is the granularity of the data. So this is really unique that because of our data set that we're able to generate these rates off of, we're able to show what the impact of loan level pricing adjustments are. So for those that aren't familiar, loan level pricing adjustments are risk-based adjustments that are driven by loan traits on individual loans. So a 3 1/4 loan may be available for a borrower with a FICO score of 780, but a borrower that came in with a 650 FICO score might only see a 350 as the offer. So we're able to, within our rates, show how those loan level pricing adjustments affect different loan traits in different borrower segments. And that's pretty unique and important for a number of different reasons.
Yeah, that really is interesting. So let's go back to what you were saying before and the impact of COVID-19 on the markets in general. How has that affected the mortgage industry specifically?
So the primary effect, and I think where a lot of the news is rates are down pretty tremendously as the Fed has pumped volumes of cash into the system, both buying mortgage-backed securities and keeping rates down in general. So rates are down, which is great for consumers. There's been a tremendous refinance boom, but some of the other things that we see in the system, which are I think interesting dynamics that are maybe covered a little bit less, is for example, the primary secondary spread. So I talked at the beginning about how Optimal Blue connects both the primary market and the secondary market. Well, if you look at what the primary secondary spread is, it's the delta between the prevailing yield on mortgage-backed securities and what the prevailing mortgage rate is. And that rate has actually gone up by probably about 50 basis points over what its traditional number is. So although rates are extraordinarily low, there's probably some room for rates to fall even a little bit lower if they're able to stay at a lower rate in the secondary market. And a number of reasons are driving that. So as I mentioned, volumes are up. So lenders have constrained capacity, and because of that, they're keeping rates a little bit higher than they might otherwise in order to control that volume. And then there's a lot of concerns around forbearance. Everybody's familiar with what's going on in forbearance. And because of that, the uncertainty, there's a little bit of extra margin being built in between the primary and the secondary market. So that's one piece. Another interesting dynamic is the credit tightening that's going on. This also goes back to the forbearance to some extent too, and general uncertainty, but pretty much across the board. If you look at all products, FHA, conforming, VA loans, the last 3 to 4 months have seen a pretty steady and slow uptick of the credit scores, or the average credit scores of borrowers who are getting loans. So although rates are extraordinarily low, the rates or the loans are really being generated by folks that are on the higher end of the credit spectrum.
All right, Brennan, thanks so much for the insight, and thanks for joining me on Trade Talks.
Thanks a lot, Jill.
All right, thanks for joining us. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.